following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Yeah, good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. To bring anything into your life, imagine that it is already there. Market-wise, let's take a look at it out here. We have the Dow Industrials down 45, NASDAQ up 9, S&P's flat, gold contract, let's see, gold contract up $2, traded $1,228 an ounce. Silver down 5 cents at $15.37 an ounce. Platinum down $4 at $9.34 an ounce. Light sweet crude off $1.18 at $31.75. You get the notes and the bonds. The notes are down 2 ticks, 130.27. Bonds are flat, 166.09. King dollar down 225 ticks at 96.68. The euro is up 20 at 111, and the yen is trading at 112.64. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. You talk about a market that's deviant. It's a beautiful thing, folks. We get option expiration happening. You have a market that gets sold off right at the open. If we take a look at the SPY, what you have is this. SPY sold down to 190.45. We're trading at 191.68. You are going against the last downtrend when we come over to January 15th. You're doing it with lighter volume. And what that sets up is that, guess what? This thing still wants to get up into and more than likely over its swing high from February 1st. February 1st inside the SPY is 194.58. It looks like we set up another small ABC structure on the way up. Inside, and this is crucial, inside a much larger ABC on the way down. Deviance, it's a beautiful thing. If we take a look at what we had happen on the open out here, and this is option expiration is always volatile, and what you do have is that the moves on option expiration are fast and furious. When we opened this morning, at 8:30, the S&Ps were at 1910. Open up, they open down at 1903. Get to 1898, reject that price, and guess what? As we're coming into this close out here, more than likely what you're going to see is that you're going to see this baby in the S&P and the NASDAQ be in the positive. The NASDAQ, folks, right now is the strongest on the way up. Let's go into the gold market. What do we have with gold? Gold, wide price spread, accelerated volume last week. What we have out here today is you're pushing a swing point and you're pushing it with volume. What we had, last week gold went from a price point of $11.96 to $12.63. We did 366,000 contracts. You end up pulling back at the beginning of this week with 341,000 contracts. And what we're doing on a Friday is that you're pushing the swing point from yesterday of 1240, and we're pushing that with volume. We've done 163,000 contracts. You're pushing 180. What I expect you're going to see with gold continues to want higher price. We go over into the NDX. So the NDX right now, and we use the Qs for the NDX. The NDX went to a lower low today. It's going to have lighter volume. NDX also wants to get into this swing point from the February 1st level. Right now, the Qs are trading at 101.47. $104.80 as a swing point. I expect you're going to go after it. And more than likely, on the Qs and on the diamonds, Qs and the SPYs and the diamonds, they're going to go into, they want to get up into the February 18th lows. That's what I'm expecting here. Because that is just about deviant enough to get the bulls going, to get the bear going topside, to get the bears nervous. That bottom line is that you got a huge counter trend bounce. Bonds. Now, as we come into the close out here, this 10-year note you want to keep your eye on. The reason being is this. The 10-year note today got to a high of 131.09. That being said, when the CPI came out this morning, you went down fast and furious into the 130.20 area. And we have volume down at that area. As the market opened and the S&Ps were down, the correlation, S&P's down, bonds up. Guess what, though? That correlation, as the bonds went from the 130 area all the way back up to 130.102, it had lighter volume. What does that mean? All day long, since 10 o'clock this morning, it's been trying to test the lows. At 1 o'clock, we got down to 130.23, 3 ticks off it. What I expect to see is that is indicating the 10-year and the 30-year is indicating that they want lower price right now. Lower price and the 10 and the 30 would equal higher price and the S&Ps. King Dollar. Let's go over and take a look at King Dollar. What you have with King Dollar is this. King Dollar is in the process of a large ABC structure on the way down. When the dollar gets hit, it's pretty amazing, folks. You're talking about big hits. When it got hit on December 3rd, it went from 100.7 to 97. It went sideways, got hit again on February 3rd, went from 98 to 96. We've gone sideways since February 3rd. When we had come down, we come down with 60,000 contracts. We were going up this week with 14,000. That's a joke. 60,000 down, 14,000 up. That's like people walking in the store, there's no one in the store, and they're saying, they're throwing their money at them. Give me, here, take my money, take my money. They're going to take their money, all right. Bottom line, this dollar is a very large potential ABC on the way down. And this one here, the probability is really high, and this is why. On February 11th, we have a high volume swing low. That high volume swing low is $95.28. We also have a monster high volume swing low from August 24th. August 24th is 93.12. When you take that correlation, and then we take that correlation and put it with the gold contract, we take that correlation when you put it with the XAU, the HUI, the gold stocks, the silver stocks, they all want higher price, and they want higher price in a big way. We go over and we take a look at that silver contract. What we have with silver is this. Silver trading out at a price point of $15.39. That is building cause to get up into the 1624, which is the swing point from October 14th. Bottom line, silver is absolutely lagging gold. The silver equities, though, have caught up with it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down 47. Nasdaq's up 10. S&Ps are up down 5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 50. You get the NASDAQ up 10. S&Ps are down 5.5. If you happen to be in the New York City area, folks, we have the Traders Expo coming up this Sunday, Monday, and Tuesday at the Marriott Marquis in Times Square. It starts Sunday night from 4 to 6. There Monday and Tuesday, we're going to have a booth there. Come on by and say hi. Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom, what's going on, my man? How you doing today?
We're doing great, man. Yourself?
Doing well, sir. I'm looking at Verizon.
Let's take a look. We get Verizon Communications. The low is 38. The high is 51. So what are we doing with this baby?
So I'm looking, it's right above a long-term trend line, and I think it goes back to May of 2013. And it's kind of just been popped up above there since early February. And I'm looking, I know that come April 1st, Frontier takes over for Verizon. Is this a opportunity to short? Or are we looking at the technicals and saying, hey, maybe the volume increases and we go long?
Yeah, no, this is a long, man. This is a really strong stock, okay? So Verizon, folks, okay, and just check this out. This is pretty cool. So this could be a monster ABC up that is actually going to get it up into and over the highs of 1999. You know, when you take a look at this, the trend here goes like this. May of 2010, you're at 24 bucks. You've been in a consolidation since March of 2013. Now, a consolidation like this, that long, number one, Nick, right? And then each and every one of these highs, you know, on a monthly basis, it's pushing with volume. You know, so if this baby breaks topside, man, the A point on this is 25 bucks. Your B's 54, so you're dealing with what, $29. Your C is 45. So there it is. That's what, 74 bucks, man. Yeah.
And so at what point, I know that it's like barely breached 51. Is that where we're looking to go long, or is it okay now?
Let me pull this back. Okay, so that's your long-term basis, right? And in order to be an ABC structure on the way up, it would have to take out the 54 level with more than 333 million. So watch what we have here. We did 416 million last month. That you always like to see, if you're a bullish, when you're going against the top of a consolidation, you love to see volume expand before you get there, because that, most of the time, fundamentally, that's a fund that's buying in. And once it gets closer to the breakout area, of course, whether they buy more, everyone else buys more, that's a true break. Okay, so now that's on a monthly. So if we take this and we put this on a daily, where the problem lies, risk versus reward, is that this just went from 43 to 50. You know, it's like...
Exactly.
You know, so the buy on this really is all the way back to the daily breakout, which is 47.23. You know, will it get there? Who knows, you know? Because of the fact, folks, is that your risk versus reward is like, if you bought it here, you know, if you bought it here, you could put a stop into 49.26. That's another way of doing it. But I would wait. You know, this has been a long consolidation, and you know, we'll see whether it breaks topside or not.
Thank you so much, Tom. You're the man. I appreciate it.
Have a great one, man. Have a safe one. The thing that's amazing about these phone companies, too, by the way, folks, is this: is that we know that communications, everything's communications, right? It always has been, but even more so now. Verizon, not only in communications, the equity has gone higher, but they pay a 4.4% dividend. You're talking, you know, real money here in an interest rate environment that is zero. In cash, guess what? They take in $33 billion every 90 days. Big numbers. Let's go over and look at the platinum market for one of the tigers. We take a look at the PPLT. Now, this is the exchange traded fund for platinum. It's trading at $90.75. This has just gone from 78. It has a high volume high up at 93. You know, bottom line, this very well could be. Actually, let me put this. I'll put this on a weekly. Yeah, sweet. Okay. So when you put this on a weekly, what you have is that the next step up on this thing is 98. And it has actually clear seal into 105. You know, and where I'm coming with the 105 on this, the 105, folks, on the way down, that's the last time we had any big volume on the way down. So, yes, platinum, gold, silver, bottom line, keep your money management in place. But, you know, and we've talked many times about if you're going to get in the physical metal market and buy physical, let's say you're going to buy physical gold, what has happened is this. Platinum, folks, is less expensive than gold right now. That's very unusual. It has been now for about a year and a half. Outside of a year and a half, platinum is more precious than gold. You'll see going forward, platinum will cost more than an ounce of gold. What ends up happening is with platinum, it's got hammered in a big way. And if I was buying bars, I would be buying platinum bars right now. And in that context, U.S. coins, so if you go to the mint, the coins are way too expensive. I've owned a lot of different coins at the mint. You know, 2003, 2004, the coins were great because the premiums weren't that bad. Right now, the platinum coins, they're right through the roof. Another way to do it is call Everbank. You know, we've had a lot of tigers call in here. They've bought off Everbank. It's a great deal. You're going to pay a little over spot, and that's it. You can give them a call. Their number is 855-750-4051. It's 855-750-4051. And that's a great way of taking advantage if you're a metal bull. And you don't trade that, folks. That's the bottom line. What you don't want to do is go buy bars of physical gold, or physical silver, or physical platinum and trade it. What you have to do with that, you have to buy it, keep it for a few years, and you'd be in the context that, okay, gold's at $1,229. I think gold's going to $1,400. That's how you got to trade that aspect. The cool thing about that versus being in the market is that because you can hit a button so quick inside the market and get in and out, what I've found is that if you own physical, which I do own physical, a lot better deal. But you have to be bullish on the deal. That's what it comes down to. If we go over to the gold market for a second, and I'll show you what we have happening on a continuous contract, this is what you have. We're at 1230. on a continuous contract. When we broke topside, this is a huge conviction break topside. This is saying that the gold contract wants to rent to $13.92. It's not a bad deal. We started out at $10.70. That's $400. Well, $400, right? Big numbers. Now, fundamentally, I was talking, my son and I do a show in the morning, I was talking about this yesterday. And what's intriguing about the gold market right now is this. When we started the gold report, when I started the gold report in 2001, everyone says, oh, gold's not going to go anywhere because gold doesn't pay interest. You know, you stay right there. We're going to talk about this as soon as we come back. Dow Industrials right now are down 45. NASDAQ's up 11. S&P's down 475. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 36. NASDAQ is up 15. S&Ps are down 350. And we're talking about the context of where gold is and going all the way back to the beginning of the gold run, which was in 2001, 2002. So when I started the gold report, folks, we get in at $282. You know, ran to like $1,750. It went to $1,900. Bottom line, this is like the second run, and I think this is going to be an incredible run. Now, that's technically. Fundamentally, when I start thinking about this, it was pretty cool. And this is what it is. The first run, always you would hear all the time, whether I'd be on Bloomberg or CNBC, is everyone, the rap is gold doesn't pay an interest, doesn't pay a dividend. Okay, it doesn't pay a dividend. Big deal. Bottom line, there's plenty of dividend stocks that, were trading at $70 and pay a 3 or 4 or 5% dividend and get down to $20. Okay? That being said, we know what happened. Gold went from $250 all the way up to $1,900. Now, in this context here, how gold has been running, when you look at the world right now, what has happened is this, is that we're in a world of negative interest rates. So watch how this works. This is where this gets really bizarre. It's gold this year, since January 1st, is up 16.4%. The bottom line is that if you have cash and you're in Europe, you're putting cash in the bank and they're charging you to put cash in the bank. If we take a look at the structure right now, and I'll put a 2-year bond up, let's say, across the world, right? Well, across the world right now, France has negative rates, Germany has negative rates, Sweden does, the Netherlands, Switzerland has been negative for a long period of time. Japan. That's on a 2-year. I turn around and I put it on a 5-year. On a 5-year, France still is in negative, Germany's in negative, Sweden's in negative, Netherlands, Switzerland, and Japan. Now, it's going to blow my mind. If I'm put this on a 10-year. On a 10-year, Switzerland's the only one in Japan. So picture this. So a 2 and a 5-year treasury in those countries, you have to pay them. Okay. So what would you do if you were in those countries? Bottom line, I suspect what people are doing is that they're saying, why am I going to pay someone else to hold my money? I'm going to buy gold. I'm going to buy silver. I'm going to buy something. That aspect, I suspect, is not only in this run, you're going to see it more in this run. And this is why. If you search an article, Larry Summers come out this past week. Larry Summers comes out. He used to be the Treasury Secretary, right? He comes out and he says we should do away with the $100 bills. Now, they always use the rap about big dollars, for laundering money and all that. My take, this is not about laundering money, folks. What this is about is this. Central banks, they can't control rates when they go negative if people hold cash. Because what they're trying to do is this. They're taxing. It's a tax. A negative rate is a tax on your money. If everyone catches on and say, okay, I got a bunch of hundreds, I'm going to keep them on my mattress. Well, guess what? You're not going to get taxed. When you take the aspect of the world going negative, central banks going negative, you take Larry Summers saying, okay, I want to wipe out $100 bills, that wiping out $100 bills has to do with they want you to spend money. They want money being pushed out there. When I put that together inside the gold thing, it's like, give me a break. People are going to get into hard assets, keep hard assets, and that's, we'll see where this shakes out. But that argument going from it doesn't pay interest versus just the other side that you are paying to put your cash somewhere, this is a whole brave new world in the context of negative rates. And, we'll certainly see where it goes. My take, and the CPI kind of came out with this today, people keep saying that we're in deflation. Well, the CPI, folks, came out today, and the bottom line is that food and rent are going through the roof. The stuff that we need is inflation. The stuff that we don't need, yeah, no doubt. China will still buy a lot of cheap stuff. There's no two ways about that. And one of the tigers are saying, and that's why the Chinese are in the U.S. buying real estate. Absolutely. You should be buying real estate. The bottom line is when you look at the context of what it would cost, or what it does cost right now, whether you're buying a shirt, a pair of pants, add that up as to what it costs to buy a hard asset. It makes zero sense. And a hard asset, real estate, you're talking about a cash flow. But, if you look back a couple years ago, the aspect is that when the Russian guy bought the New York Nets, they thought he paid a fortune. They thought he overpaid. Well, guess what? He didn't overpay because the ruble lost 40% of its value. He got a great deal. The Chinese buying huge buildings. They think they're overpaying. Guess what? No way. that the ruble's gone, the yuan has gone down dramatically. It'll probably get down more. It's all about what the value is, what you get. Hard assets, that's where it's at. We come into this marketplace. Now, what get intriguing about this market is this. My take on this market is that you still have a large ABC structure on the way down. You got a small one on the way up. And in that aspect, this market looks to me like it's going to break the August 24th lows, go a lot lower. Now let's talk about after that. What happens after that? And this is not, by the way, this is not like a 2007 deal. What this is, 2007, what you had is this. 2007, you had real estate crash, market crash, everyone goes broke. This is a Wall Street event. This is the banks took care of everyone that had wealth. So if you're in the market, great. Market goes up, everyone feels rich. Some people may have taken it, some people won't. They'll get poor again. That's the way it goes. This market here, I suspect, is going to go dramatically lower. That being said, what will end up happening because of inflation is that the hard assets inside the companies, that's what will bring the market all the way back up. So it's going to be wild just watching this whole thing, how this whole thing is going to shake out. We go take a look now. Let's go to the oil market, because the oil market right now looks like, to me, we're setting up for a higher price. What the oil market did out here today is that it's building cause, and the cause that it's building right now, let's pull this up. We're at 31.89. We closed out 2:30 in the afternoon, right? We did some good volume. We did 471,000 contracts, but they didn't croak it. Oil was only down $1. At one point, it was down almost $1.75. This oil market right now looks like it wants to first off run into 36.28, and we'll see whether they get any juice at 36.28. The cool thing here inside oil is that it can be absolutely a dead cat bounce, and you can still get up to $41 to $45. And that correlation, if we go look at ExxonMobil, what you're going to see is this. ExxonMobil has rejected lower price today, has lighter volume, trading at 82. Exxon's going to be going after this high of 87. You start putting that together, you put the bonds want lower price, oil wants higher price, gold wants higher price. Bottom line, these indices want to go after this February 1st swing high. This is Tom O'Brien. This is TFNN. You stay right there, folks. So come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 27. You get the Nasdaq up 19. S&Ps are down 2. And folks, if you would like to test drive either one of my newsletters, the way you do it, you come over to our website at TFNN. You go into newsletters. If you'd like to get the gold report, go into investment newsletters. You see the gold report right there. You can test drive that 30 days absolutely free. If you'd like the daily newsletter, market insights, go into trading newsletters. You can test drive that 2 weeks absolutely free. Now, let's go over and take a look at the XAU and the HUI. So XAU, Philadelphia Gold and Silver Index, is trading at 60.64. What this did, this took out its swing point, took it out with monster volume. What we did last week is this. We did volume of 307 million shares. We went from a price point of 51 to 60. The swing point that it was taken out had 189 million. That's what you're looking for, folks. You're looking for, when you get higher price, what do you need? You need more people coming in. You need more demand. So your swing, when we were trading at $58.14 in October of 2015, you had 189 million. We blew it away with 307 million. What does that set up? Well, it sets up that the XAU wants to run up to 77. Right now, we're at 60. The Gold Bugs Index, and this is an indication that gold wants dramatically higher price, is trading at $159.22. Now, the swing point that took out was 139. This thing just ripped higher in a dramatic way. Same setup, took out the swing point with monster volume. So the swing point we were taking out in October also is 139. 139 bucks. It had 111 million shares. We took that out with 130 million shares, and then we followed through. Check this out. This is amazing. We went from 120 to 140 with 130 million. We go from 138 to 163 with 194 million. The Gold Bugs Index wants to go to 211. This is quite a move. You know, we're talking about 159 to 211. You know, that broke that whole downtrend, and when you break a downtrend or break an uptrend, what you want to see is that you want to break it with conviction. What conviction, folks, is this. Conviction is wide price spread, accelerated volume, and it doesn't mean you don't do a straight line move. Bottom line, though, that's where it wants to go. And then when you start piecing together equities that are inside the XAU, HUI, and then you piece together the indice itself, I'm going to bring you over to Rheingold Resource. And what you have with Rheingold is this. Rheingold, folks, from 2007 has been one of the strongest gold stocks. When you take a look at this, what you're going to see, and this happened last week, is that Rheingold's been in a consolidation for 3 years. This took apart that consolidation in a dramatic fashion. We got over the price point of $84.61. The top of that consolidation, each one of them, you had volume of 4.9 million, you had volume of 3.7 million. Guess what? We took that out, folks, with 9.8 million. That sets up, we bring this back, watch this now. That sets up not only a run to the highs, okay, this was pretty wild. The highs in Rheingold is 127. It very well could be an ABC structure on the way up. And if this is an ABC structure on the way up, this gold market is going to be on fire. And this is why. We're starting at a price point when the gold market started in 2002, 2003. We started at 250 to 282. This market here is starting at 1,050. You know, right now, technically the way I see it is that I'm comfortable with the, 1,400. We'll see when we get up to the 1,400, what else it has behind it. The equities, though, are stating right now that they want much higher price. As we go into the close out here, this is going to be a cool close because what you had out here on the S&Ps, the S&Ps sold right off at the beginning of the market place today. More than likely, it's going to be a flat market coming into the close. And what that sets up coming into Monday, that's going to set up a run to get up into that February 1st level. And that February 1st level, the battle lines are set up, and they're set up in an incredible way. It looks to me, if in fact this is a small ABC up, watch how this shakes out. 1802, the low that was established last Friday would be your A point. Your B point would be 1933. So you're talking about 131 S&P points. If the C is out here today, you're talking about a 2,000 S&P. Now, a 2,000 S&P, what's so cool about this is that 1991 is your December 18th swing low. And I'm going to shift this now to the SPY because if you've been listening, bottom line, that is where I suspect it wants to go, and this is why. When we came down, we came down fast, furious. We tested the August 24th swing low, and because we came down so fast, didn't have enough volume. We bounce a little, we come right back way too fast trying to test that again. And as we tested it, when we look at the SPY, so this is what we did. The first test had 286 million. Well, we were testing 507 million. You go back topside, the second test had 191 million. 191 million versus the 286 versus the 500, right? You can see it just gets tired. That correlation, because we tested it so many times, now it wants to go topside. If, in fact, this is an ABC structure up, the ultimate would be like this for a bear, which I am. I'm bullish right now, but I'm a bear. So the ultimate would be, if this is an ABC on the way up, your A to B point, whether it's an ABC down or up, is always a straight line move. Your B to C drives everyone crazy. It's all over the place. So if it's a straight line move, we move next week, you go straight into this 199 or 1999. And when you do that, what happens is that when you do straight line moves, the market gets tired. Just like whether you're running, swimming, if you just go straight, you're going to get tired at the end, right? The price projection is at the end of that. And if that's what you do, that's where the sell's going to be. And, we'll go from there. It's a great market, folks. If you want to understand how markets like to move, and the reason being is that they're moving very quickly, and you can learn a lot very quickly. We go take a look at the TLT. So the TLT is the 20-year plus. TLT, this is a classic ABC down. And this lines up with the bonds, by the way. We came down, You went up yesterday and today with light volume, and it gave it up on price. You stay right there, folks. We'll come right back. Dow Industrials right now down 31. Nasdaq's up 17. S&P's are down 3. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 33. You get the Nasdaq up 16. S&Ps are down 3. If we go over to the Dow and we take a look at the Dow, what you're going to see there also is the Dow wants higher price. So, this is option expiration, folks. Option expiration, you have a lot of volume come in. The Dow got down to a price point today of 16,278 and rejected it. It's up $100 off of that. The Dow also at this particular level is going to be pretty wild. And the reason being is that you're laying right below the high of the 1st of February. And this wants to push into that high. And what we actually did is that we pushed into that high with volume on Wednesday. If we take a look at the characteristic right now of the volumes inside the indices, what you have is this. Now, this is pretty wild for an option expiration. We're only at 807 million on the NYSE. And there'll be a lot of volume that comes in at the close, but it's not going to be a monster. We're at 1.6 billion on the NASDAQ. Now, check out how cool this is, okay? Because option expiration, that volume right there should be monster right now. There'll be more that comes in at the close, but this is what normally happens. At the open, you have monster volume. You get good volume all day long. At the close, you get monster volume. This volume will not come in over how meaning what we went into today as we pulled lower. Now, that is so hard to do, and it's so cool because what that sets up, and this is pure deviance in the marketplace, but that's what the market likes to do. What does it like to do? It likes to take the most amount of money away from the most amount of people in the least amount of time. And that's more than likely what this move will do. Bottom line is that, folks that were in the market, unfortunately, they sell it, market gets sold down, they sell out at the lows, you get a counter trend bounce, it starts coming back up. You get the gist of it, both ways. We go take a look at the overseas just quickly. So the UK out here today, what to do with the UK? Bottom line, back down, rejected lower price, had lighter volume. We take a look at the DAX in Germany. DAX in Germany had a sideways move. DAX in Germany is set up to also go top side. Now, Asia is going to open up first on Sunday night. Asia, sideways move, same deal. Asia showed quite a bit last night, folks, okay? Because what happened is that the futures in Asia, when they were prior to the open, looked like they were going to get hammered in an incredible way. The Nikkei, came down about 2.5%, and that started making its way back. The rest of the indices in Asia, they rejected lower price. If we take a look at the Nikkei right now, which is one of the weakest indices, check it out. The Nikkei last night came down with 1.5 billion shares, rejected lower price, and it was going into 2.1 billion. When you start putting all these together, this little baby is going to go after the swing. We'll see whether we take it out with volume. But what I do expect, as I was saying earlier, is that you're going to see it go up on lighter volume. We'll get up to that 1999, about that area, and more than likely we'll see it flip around. See, the harmony in this marketplace right now is really cool. And specifically what I mean is this, is that each and every time that the S&Ps get a bid going topside, your bonds are going down, they're going down pretty quickly. It's subtle out here today because the 10-year is only down one tick, but yet we know that we have a high volume swing low on the 10, a high volume swing low on the 30. That in itself is saying this market will get a little bit more juice. That's the short term. The long term, and this is where it is really going to be bizarre. The long term, folks, the 10 and the 30-year at the highs, will more than likely go back to the highs because that's a high volume swing high. Pretty amazing. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Look forward to speaking right back here Monday morning. Go get them, folks.